The security token industry is here, and it's still not too late for you to get involved. Coming up on this episode of Security Token Insight, T0 issues its preferred T0 security tokens.
Plus, highlights from Security Token Industry Launch Week. That and much more is coming up on this episode of Security Token Insight.
Hey everybody, I'm Adam Chapnick.
And I'm Amy Wan. Welcome to Security Token Insight, brought to you by the Security Token Academy. The security token industry is gaining momentum and will provide a key foundation for the evolving financial internet.
Security Token Academy provides insights about this new era for security token enthusiasts, investors, and issuers.
Coming up on today's episode of Security Token Insight, in your security token investing news, big news from T0 as the company issues their security tokens. We'll tell you how much was raised. We have an expert interview with Patrick Campos, Chief Strategy Officer at Securrency, plus highlights from the Security Token LA Meetup panel discussion on regulations. Also, we'll take a look back at all the events across the nation marking Security Token Industry Launch Week.
Now it's time for your security token investing news. RealCoin has enlisted Securrency to help with its security token offering. The new blockchain-based security token helps provide liquidity to investments that are generally known to be illiquid. RealCoin is looking to fix the liquidity and accessibility barriers in the property market. Their token gives holders fractional equity ownership interest in the company's diversified property fund. In other news, Overstock's T0 has issued their preferred security tokens after raising $143 million in their security token offering. More than 1,000 investors from around the world participated in the STO. There's a 90-day lockup period for investors to ensure compliance with securities laws and regulations. That means they could trade them on a secondary market starting on January 10th of next year. And finally, the Security Token Academy has been featured in dozens of articles about our recent Security Token Industry Launch Week. There was a great write-up on Medium.com covering the conference at the Conrad. There was also an in-depth review posted on Crowdfund Insider's website. Be sure to check out both of these articles and tell us what you think. More on Launch Week coming up in minutes, as well as details on our next meetup.
The Security Token Academy is on the leading edge of the security token industry. We interviewed top experts, lawyers, and business leaders from around the world.
That's right. I had the pleasure of sitting down with Patrick Campos. He's the Chief Strategy Officer at Securrency, and he's also a lawyer. Securrency is also a Platinum Corporate Member of the Security Token Academy. Hear about their latest security token protocol, the CAT20, and much more in this expert interview. Okay, so for everybody who hasn't yet heard of you, can you give us just the quick rundown on what is Securrency?
So that's incredibly difficult because Securrency is a pretty comprehensive platform,
yes.
But I could summarize it maybe easily with three aspects. One is we have an issuance platform with what we call Decentralized investment banking services. It's all the onboarding, issuance tools, as well as the back office token maintenance support. The second part of it is we've got interoperability tools to promote liquidity for security tokens through the use of identity and credentialing services and interoperability. And then the result of that is the third thing, which is our new security token protocol, the CAT20, which stands for Compliance Aware Token, which is what we believe to be the world's first truly interoperable multi-ledger security token protocol.
Okay, that's a huge deal. Huge deal.
That's a big deal.
Okay, so tell us about this new protocol and tell us why interoperability is such a game changer, which it is.
It's all about liquidity. It's all about finding the players in the secondary market where they are. And so that ability to move tokens, security tokens, not just from one chain to the other, but also off-chain, where you have legacy systems or across exchanges, while retaining the compliance features and the identity features. That's critical. It's critical for the interlinking of these various pools of liquidity worldwide. So we call it the network effect, of course, which is establishing really a decentralized network of centralized pools of liquidity, if you will.
Okay, now bring it back to the caveman, which is what's my job. I'm the resident caveman. So if I'm doing an issuance, why would it make a difference to me? What are the benefits that I get from having interoperability? Now you say you're talking about having access to lots of different pools of liquidity, but in like caveman terms, what does that do for me that just hasn't been possible before?
Yeah, so look, great question. At the end of the day, if I issue a security token to someone who's just going to hold it for 30 years and never do anything with it, I've just basically, it's a gimmick. There's no additional value to that token holder who has no intent to do anything with it, aside from perhaps some secondary features where we might, we were speaking earlier here about things like tokenizing or representing collateral interest. But if we ignore those pieces of it, the reality is what makes that security token more valuable is the fact that it is more liquid, is the fact that now you can appeal to a whole different set of investors who are not long hold investors, who are interested in having things that they can exchange when they need to exchange them, as individual investors or institutional investors when they need a liquidity event. So that presupposes that you have liquidity. You've got to create the conditions for liquidity in the first place. So security tokens become more valuable and more marketable as a result of the promise of liquidity on the back end, and that liquidity is established by the very fact that those tokens are a digital form that are easily exchangeable, and now with our protocols, exchangeable in a highly interoperable manner across different exchanges, across different ledgers, that sort of thing.
Right, so if I'm an issuer, I'm a young startup and I want to give these investors access to what I'm building, something that I can offer them is the idea that, okay, you can get into my company, but relatively quickly, there are going to be a lot of people who didn't know about us, but when they hear about us, they're going to want us.
They're going to want a piece of it.
Right, and with your new protocol, many, many more people will be able to buy my investors' tokens, right?
That's right.
At the bottom line, like caveman. And
that's right. That's in its simplest form. That's it right there.
And it's a
exactly.
really big deal, I
It's
think, for
deal.
issuers. I think especially in such a nascent community industry as we have, there's just not that many places where people can do any kind of secondary trading.
That's right.
And you guys are making it possible to kind of turbocharge that for issuers, which I think is. I don't know if people understand what a big deal it is, but it's a really big deal.
Yeah. Thank you for saying that, because we're really excited about it too. We are. It's great. First of all, organizations that like Security Token Academy that understand that this really is the future of finance and are getting the word on the street. That is actually helping to legitimize something that I think a lot of people say, oh, well, isn't this just sort of a new form of the old sort of ICO? And it's not. It's really a new form of the old finance, system of finance, that's leveraging and taking advantage of the technological benefits that we saw coming out of the cryptocurrency world. That is, as you say, this is truly game-changing stuff.
Yeah. So can you, for our viewers, explain a little bit about what you just touched on? So security tokens, what are the things that make them much more versatile and powerful than sort of the old, I guess I would call it the file cabinet model?
Right.
What do they do?
So first of all, one of the key features of where people want to go with security tokens, and actually where we are with our CAT20 protocol, is what we call automated governance, if you will. So we leverage a proprietary piece of technology that we have called the rules engine, which really writes into the token the rules that apply, first of all, for that transaction. There are transactional rules, so we might say, hey, my minimum ticket size is going to be $100,000, or I only want my tokens to be held by graduates of Arizona State University. I happen to be a graduate of Arizona State University.
I'm so surprised.
Undergrad. But there are also obviously regulatory rules that apply across different jurisdictions. So that token now, we call it compliance awareness. That's a patent that we filed. It is compliance, it is aware of what it can or cannot do. That's new. That's never existed before.
Yeah.
Normally you would have to find a bunch of professional advisors who are themselves aware of what you can and consult with them. Now the token, you consult with them once, you write those rules into the token, and now the token is self-governing in that respect. That's incredibly different.
Yes.
And that establishes really that first part of the liquidity that we keep talking about.
Right, and now Securrency, can it help me, if I'm a new issuer, you can help me from soup to nuts, really, right? So if I just say, hey, I've heard there's this thing called security tokens that might be better than just doing stock certificates.
Yeah,
I just
that's right.
call up Securrency and you guys help me, right?
That's right. And we do work directly with issuers, but one thing that I think is really important is, a word that's used and maybe misused a lot is disintermediation. And we're not actually looking to disintermediate a lot of the actors that are in the space already. We're not looking to disintermediate the bankers or the lawyers. They still have their very critical roles to perform. What we do is we actually provide them with tools on a white label basis typically. So actually you could call Securrency and we could provide those tools to you directly, or you could go to a broker dealer who has our tools and is white labeling those. What we don't do, because we're just a technology company, we don't market.
Right.
You still need to go to a broker dealer
Yes.
to market your securities, and we give them the tools on a white label basis so that they can provide these incredible new technological resources to you.
Got it. Okay, so where do you see this new protocol taking us that we aren't today?
Well, first of all, it is that key to interoperability. So one of the things, and I think you've spoken with our CEO, Dan, about
Yes.
this. One
Dan
of the
Doney,
things,
amazing interview. Check it out, securitytokenacademy.com.
absolutely. It was an amazing interview,
It
by the
was.
way, from both sides. So it's a good watch. I concur. We both give it 2 thumbs up.
Four.
So there we go. What was the question again? We were talking about.
I'm just, you've got this amazing sort of revolutionary protocol. How do you guys see it changing things in the future? From, the way we do things today.
Yeah. So where I was going with that in terms of the limitation to one ledger, for example. If you think about it from a government's perspective, I'm just a simple thing that I know that Dan talked about. If you think of it from a government's perspective, and you say, okay, here's a good idea. Let's move trillions of dollars of the nation's economy onto one ledger.
Oh God.
The question sort of answers itself, right? So number one of the things that our protocol is able to do is what we call sort of disaster recovery. We can literally lift a cap table off of one ledger and drop it onto another ledger in case there's a hack or whatever. So this is really important.
Yeah.
But that's in the worst case scenario. That's disaster recovery.
But that's a big deal.
It is a big deal. Preserving value is a big deal.
Yeah.
And not just preserving value and recovering it, but minimizing the time of disruption in the financial markets, right? So, but the other part of it, and we've been talking a little bit about it, is the interconnection of these different pools of liquidity and the ability to allow a user on one platform to see that there is a identified credentialed user on another platform, not know anything about that person except that is someone that there's a wallet out there that can accept this token, and a transaction can now occur.
So
that
sorry to
universal
interrupt,
credentialing. No,
but
please,
I think
please.
that's something that I think a lot of people don't even realize is a issue right now.
That's
so
right.
can you describe what it would be like in right now? Someone on one platform, what don't they know? They don't know about that other guy. Why?
Well, so I use this is a really crude analogy, but
Perfect.
But I like it because
I'm a crude man.
and I'm a pretty simple dude myself. So this is how it works. If I want to get in my car and I have a California driver's license and I want to drive to Texas, what I don't want to do is get stopped at the Arizona border and told I need to take a whole new driving test, okay, and be issued a new driver's license so that I can proceed on, and then I get to New Mexico and the same thing happens all over again, right? So even though I've been issued a California driver's license, my credentials are recognized across all of those states so that I can continue on my drive, and I am qualified to continue on my drive. I have a license that says that I have the proper credentials. That license also contains my identity, so if somebody needs to know, who is this person and do they have the right to drive? There it is. That's my license, right? That's a very, very simplified way of describing what we're really doing here, which is saying we need to, for compliance purposes, we need to identify, we need to know that that person is who they say that they are, number one. And number two, we need to identify what credentials that person has, what rights that person has with respect to a particular transaction. So we say in the case of transaction A, well, we know who you are and you're a retail investor, that's fine, you can participate. But in transaction B, you need to be an accredited investor. Oh wait, by the way, you're not a resident of the United States? Okay, under Reg S, that's fine. So that credentialing process and the rules that are built into the token allow for the instantaneous identification of those people. So in this case, for example, let's assume that we now have a token that is freely tradable. It's a security token, but now it's freely tradable. You think, but that's not exactly correct. Can I trade that token to someone in North Korea? Well, it turns out that I can't.
Right.
For a whole different set of regulations having nothing to do. So we still need that type of distribution control, even in an environment where we think that we have free trading. You still have other factors so distribution control continues to be an issue. And if you're an issuer, you really don't want to wake up in the morning and find out that there are people on your cap table who aren't supposed to be there.
Right.
And that's distribution control. It continues to be important.
Right, so it couldn't be clearer about why that is useful.
Right.
And so today, without that, are people forced to confine themselves to California, as it were, in their understanding of their users or their investors or their token holders?
It's actually funny that you should say that. I'll share an interesting anecdote off camera with you about that very question about just California. Okay. So what people are doing is sort of taking. There are a number of different approaches that people take. Sometimes they'll say, well, look, we'll lock down the tokens for 12 months and then they become freely tradable, and so off they go. I think that people have recognized that's not going to do for the reasons that I just pointed out. So then another approach that people are taking.
Follow that doesn't do, because at 12 months you still need to know where it's going, right?
I like to say it's like putting someone in a car and sending them, at 100 miles an hour toward the river, and you say there's no bridge there, but don't worry, by the time you get there, that maybe there'll be one. It's not useful, right? So I think that methodology has passed. We now see, predominantly the use of whitelists and smart contracts on the Ethereum network with ERC20 tokens. That's a fairly manual process on both sides. So the whitelist is fairly prescriptive. Yep. And of course smart contracts can be pretty cumbersome to write. We do that in a much more simplified and if I may say so, elegant way, in that we don't need a whitelist. We don't need to identify, oh, I know who that person is and he's qualified. We simply say, these are the attributes that one must possess in order to participate in this. And the token looks out and says, I see that wallet, that one has the right attributes, that one doesn't, and that's how it works. So, so the methods that are being used now are useful, but I think that they're transitional methods, and ultimately what Securrency has developed we believe we say it's the standard for the future of finance. We think that there will be one protocol that basically everyone can all use and interoperate, and we think that we have it.
One protocol to rule them all?
One protocol to rule them all.
One protocol to bind them?
Not to bind them.
One protocol, I forget how the rest of it goes. In the darkness, find them. Okay, so Securrency, this is amazing. So where is it, this protocol is launching when?
At your event.
At our event. This is the Security Token
on
Academy
Friday.
New York launch event this Friday. Amazing.
Yes, it is.
I should have said maybe it's last Friday by the time we see this video. Okay, we're very
But it's still this Friday for us.
Yes, for us here in real time. Okay, and now what about for Securrency as a company? Once that's happened, what's the plan for the next 6 months? What's happening? So
we're trying to get the word out really to all of the other players in this space that a rising tide lifts all boats. And so what we're really trying to do is talk to all of the folks who are also issuance platforms and say, listen, let's all cooperate, because here's the deal. We can be super clever, and if the security token economy never takes off, we fail just like everybody else. And that's not useful. What is really important is that we demonstrate to a global community of financial services professionals, of investors, of regulators, that this is not just viable, but it is a truly evolutionary step, that this is really the future. It's transformative,
It really is.
exactly. And so we all have to really work together. We want to make our protocol available to issuance platforms and advisors so that we can create this truly sort of networked ecosystem to establish that kind of liquidity that we were talking about earlier. Mm-hmm. And so that's really what we're going to be focused on. We will be working, of course, with issuers to, to demonstrate, how really functional, our technology is. But beyond that, I think we're going to be working really closely with a lot of venue operators, exchanges, whether they be ATSs or crypto exchanges, with other issuance platforms, and with all the really incredibly talented and forward-thinking people who are operating in this space to really establish this security token economy.
If you want to learn more about Securrency, go to our website, securitytokenacademy.com, and click on the directory page and look up Securrency.
Great interview, Adam. We met Patrick and dozens more people at the Security Token LA Meetup on October 1st. The meetup was the official kickoff to Security Token Industry Launch Week. The Los Angeles meetup was held inside Maggiano's at the Grove. It was a packed house as security token enthusiasts and industry leaders came together to talk about security tokens and to enjoy some great food and drinks.
Amy and I presided over the event that featured a great spotlight talk by Tatiana Kaufman, Chief Token Officer at Full Cycle Fund. Our crew was also busy all night conducting one-on-one interviews with attendees. We'll be posting those in the coming weeks on our website on the interviews page.
The evening also included a special panel discussion on security token regulations. I moderated the panel that included Jor Law, co-founder of Verify Investor LLC, and Alan Jebsen, Director of Business Development at StartEngine. Take a look. What is your vision of what the security token industry can or should be, and how long do you think it'll take to get there? Do you want to start?
Sure, I'll start. Hi, everyone. Great question, Amy. I think Tatiana made some good points, especially about letting the market settle a bit. There's a lot of companies out there with big visions for what we want the security token landscape to be. I definitely envision primary issuance platforms like StartEngine, but also companies that are thinking of primary issuance with the secondary trading in mind, as that gentleman had a question about. So that's probably where the industry is going, is how do we issue security tokens that are in compliance, are in regulations, but more importantly, synced up with the ATS and the exchange systems out there for robust tradings. Because we all know the ICO market last summer, it really exploded. And that was probably large in part because of the unregulated exchange and the ability for anyone to make a quick buck off of these coins. So if we can emulate that type of activity on the regulated side, on the secondary market, I think that's where the true vision is going to be.
Fantastic. Jor, vision and timeline?
So I think that unless we come into, a process where, we realize that the technology isn't quite there yet, I think that pretty much everything gets tokenized. And by everything, I mean not just securities, that people are thinking about, the equity securities, but also debt. And frankly, anytime someone goes and just starts a company, even if it's like with 3 people, even if it's technically not a security because they're the sole operator, I think that one day that just gets tokenized. The reason I think that is because, if you think of how the world works today, which is, largely some sort of hybrid form of either paper securities or digital securities, and then you realize that, if you agree that digital is generally better than paper, and then you agree that decentralized is better than centralized, then you've got a double spend problem unless you're using some sort of blockchain or decentralized ledger technology. You've got some issues. So if you've agreed that you've got to go digital and you want to try to decentralize to some degree, then you kind of have to go blockchain. You kind of have to go DLT. And I think, therefore, it will have to go that way. I think you'll start seeing early simple deals this year, next year. But the trend of getting every company in the world over, it's going to be, decades.
So, the US SEC has gone down a certain regulatory path, right? They are, they said, okay, the Howey test applies, all our case law from the past several decades applies, and the U.S. right now, at least in the regulatory playing spaces, is a little bit lonely. Will the other countries follow suit, or are they going to exploit regulatory arbitrage? Where is all this going from a international or global perspective?
Yeah, I think they will follow suit. I think other countries are not interested in their citizens getting ripped off potentially with this unregulated market. So I think it's in their best interest. I think the U.S. was particularly innovative in crowdfunding and Jobs Act regulations that, as we know, are used to help issuers raise capital from the public. But that notion did start in Europe in the beginning. UK has had those laws, and other European countries has had crowdfunding private securities laws in place before the U.S. So in some ways, they're a little bit more advanced in that thinking. But I definitely think the larger countries, the more the larger GDP countries are going to follow suit. I think there's always going to be the Cayman Islands or the Gibraltars of the world that are going to be a little bit in question, but for the majority part, I think they're going to follow suit.
Yeah, I think so. I mean, I think you'll certainly get some jurisdictions that are going to be friendlier, right? They don't have to worry about protecting their citizens that much if all the investors are really outside anyway, right? So if they make their country or their jurisdiction more friendly, then they'll attract some business, and we've already seen that. That being said, the same, if the U.S. does something, a lot of people are going to pay attention, and they might fall in line. And you see some countries like Singapore, which are starting to become, a little bit tighter, even though they've been, seen as like the Switzerland, a little bit more loose, and that's getting closer to the U.S. stance. I do think that over time the U.S. laws will improve. I don't think that they're necessarily wrong to take a hard stance now, and the same laws that they're applying to the blockchain are the same laws that built the largest economy in the world. So they're not necessarily that bad.
So I want to follow up on that comment, right? Because, in blockchain, we often hear the words decentralized. Everything is so decentralized. It's immutable. We're creating an entirely new paradigm. And yet securities laws and all of these laws really apply to centralized organizations. So whereas you see this U.S. approach of, okay, we're going to apply old law, we're going to have guidance and clarification, then you see other countries like Japan where it's like, okay, well, we're just going to create an entirely new set of laws for all this stuff in crypto and blockchain. Do you have any comments on that approach? Do you think some countries are going to follow that instead?
This is interesting. I mean, I think that, it's easier right now to obviously just play within the current paradigm, but there are some issues with it, of course. I think until everyone trusts the technology to replace incumbents that they know they can regulate and they know they can enforce against, you might kind of be stuck for the short period, at least here in the U.S., with going through the existing players and existing sort of set of laws, which will get changed unless the financial institutions that are coming in with the lobbying power choose not to change it because they hold all the cards. It's hard to say.
Yeah, I think the U.S. is going to hold firm. I think the SEC is just trying to figure out exactly how to regulate this in the best way possible, but there have been new financial regulations that have been passed that are very innovative, like the Jobs Act. So we're still in the early ages of companies being able to use those regulations in a much more innovative way. And I think the SEC has pretty much laid a groundwork, a set of rules for companies to follow. But the possibilities are endless if you can raise a large amount of money from the public in security token fashions the right way. So I think it's still trying to figure out how do we use these rules that have just been created in the past 5 or 6 years and use that as kind of the innovative framework first before thinking of new types of regulations to pass.
So if you guys had one
regulatory wish. One thing that you could do to change our current regulatory ecosystem in this industry, what would it be? What does it look like? Are we talking about a regulatory sandbox or what? Use your imagination. What would you wish for?
To find out Alan and Jor's answers, be sure to watch the full panel discussion on our website, securitytokenacademy.com, and click on the interviews page.
As Amy mentioned, that meetup was the start of Security Token Industry Launch Week. The week was marked with events from coast to coast. We traveled from Los Angeles to New York for the next meetup that was held inside the New York Marriott downtown. On Thursday, we boarded the Spirit of New York yacht from Chelsea Harbor for an evening cruise along the Hudson River. There was dancing, gourmet food, the drinks were flowing, everybody was having a great time networking. The night was fantastic. The week ended in a big way with the Security Token Industry launch event inside the Conrad, New York. Hundreds of people were in attendance as industry leaders rang the opening bell to signal the official kickoff to the security token industry. It was quite the moment.
The all-day conference included keynote addresses by David Wield, CEO of Wield & Company and former vice chairman of NASDAQ. Fabian Vogesteller, founder of Luxo, Ethereum developer and creator of the ERC20 token standard, as well as panel discussions from the top business leaders in the industry from around the world. If you missed out on this world-class event, we will be putting all of the content on our website, securitytokenacademy.com, so keep checking back.
And mark your calendars for our next Security Token meetup. It takes place Tuesday, November 20th inside Maggiano's at the Grove in Los Angeles. Yes, free food, drinks, networking, and more. You can find all the details on our website. Just click on the events page. You can also visit us on our meetup page at the address on your screen. We had a great turnout last time, so be sure to RSVP to secure your spot to this free event.
Okay, that's it for today's episode. Be sure to follow us on Twitter, Facebook, Telegram, and Medium. And don't forget to subscribe to our YouTube page so you don't miss out on any of our videos and expert interviews. I'm Amy Wan.
And I'm Adam Chapnick. And before we go, a big thank you to our Platinum Corporate Members, Merrill Lynch and Securrency. And for everyone here at the Security Token Academy, thank you for watching. Want to learn more about security tokens from the top leaders in the industry? Well, be sure to visit our website, securitytokenacademy.com, and click on the Interviews tab so you can stay tuned in.